Good morning and welcome to all members of the committee and other members and officers in attendance. I am Councillor Alan Alvey, Chairman of this committee. Welcome to members of the public and press who may be viewing the meeting live on YouTube. The broadcast will remain available for a minimum of 12 months. For the benefit of those viewing the meeting online, I would ask each committee member to introduce themselves before speaking for the first time. So we start with apologies.
Apologies from Councillor Emma Lane, Chairman.
Okay, thank you. Then item 1 is to confirm the minutes of the meeting of the 31st of May as a true record. Everybody
Agreed.
Happy?
Agreed.
Thank you. Item 2, declarations of interest. Do members have any declarations of interest in respect of the business of this meeting? No. Public participation. There are no public participants. So we move straight on to item 4, external auditors annual report. Now, Kevin Souter would normally do this, but I understand James is going to ably step in.
Chair, yes, Kevin sends his apologies. He's signing off another audit today,
Okay.
so it can be here for videos. I'm pleased to present our auditor's annual report to yourselves. And essentially what this report is doing is bringing together all of our auditor's work for 2021, as well as providing you with commentary on VFM arrangements. I'd like to take the report as being read and just highlight a couple of items to bring to your attention. So essentially you'll see the first part of the report gives a summary of the results of our audit procedures. Much of the content will reflect what we provided to you in our audit results report earlier in the year. However, on page 18, you'll note there's a couple of additional items to bring to your attention. One of which were errors noted in the group work, which have been adjusted prior to signing the accounts. And also there was a COVID-19 grant income and expenditure, which was to be classed as principal rather than agent, how it was originally shown in the draft accounts. So that adjustment was for 3 million, but there's actually no bottom line impact. It's purely a classification adjustment. The main body of the report from page 19 of the reporting packs relates to our VFM work. The commentary itself, I'm sure will be no surprise to committee members. You'll be aware of much of the detail in terms of how the committees are structured, items like the risk register, so forth. This is more for the wider members of the public to have a document all in one place to see how the council has ensured its value for money. And you'll note in the report that we have not identified any significant risks, or significant weaknesses in the council's VFM arrangements for 2021. Finally, I'd just like to bring your attention as well to the fees noted on page 39 of the reporting pack. This has been discussed with management already, and it has been submitted to the PSAA for them to determine, similar to previous years. So the final fee has not yet been determined, so it's likely that final figure will change, and we will update the committee once this has been completed. Happy to take any questions you may have.
Can I, before anyone, I've got a number of questions, but very quickly on page 9 of our pack, number 4 of your report, you say you've not yet issued the certificate for 2021, and just explain what the problem is in there.
Yes, so prior to being able to issue our certificate, we are required to do some work for the NAO as part of their whole of government accounts. We have not yet received their group instructions to know what work is required, essentially. So until we receive that information, we're not able to complete that, and then after that the certificate essentially closes the audit.
Okay.
So from emails I've seen, it looks like those group instructions are imminently to be received by us, and based on previous years, as we know, The de minimis has been set at 500 million, so there wouldn't be any additional work for New Forest, and it will just be a formality at the end. But yeah, we are yet to receive that formal confirmation from them.
Okay, thank you. Before I carry it, has any other member got any points, questions they wish to raise? I think one, let me just see, there was one, the fees, I think we should, I would just like to note, I think, that we have a scale fee of 42,700 and we're looking at a total audit fee of 89,000. I mean, that's more than double. Is this normal? Is this?
Yeah, it does. Yeah, I would say it does reflect other councils, the way that the fees are increasing. What I would note is, as part of the process for so you'll note there's two elements there: the rebasing and the scale fee variation. So the fee variation, we've broken down that in the report. So that's for specific items, and I would say that is more likely to be agreed with the PSAA. The scale fee rebasing, that is the element where last year they determined a percentage, and we imagine that they will agree a similar or some sort of percentage again. So it's likely that the final fee will not be as high as shown. But as we do not know exactly what the PSA have agreed is the rebasing figure when they determined last year, we have to do the same process again. So that's why the figure is larger, but
Okay.
I'm sure it's likely to come down.
Okay, thank you.
Chairman, can I just comment on
Yes.
that, just from the management side of things, because as James says, we have discussed this. So Chief Executive and I met with James and Kevin. It's fair to say we weren't overly happy to see a fee as large as that. As much as we can understand the rationale for, say, the scale fee rebasing from last year, because there was general appreciation that the scope and amount of value for money work, etc., had increased over time since the original contract was let. The SAA recognised that as well. Actually, so did Treasury. So we actually did get some additional funding to help pay for some additional scale fee. But I think it's that and the combination of a fairly chunky variation this year as well that sort of compounded the issue for us. So as James says, this is going to be submitted to PSAA. It doesn't say that management are content with the level of fee variation, but it's just a case of that is the fee that EY have come up with, and that is the fee that has been submitted to PSAA. So we'll see what.
And if they agree with it, then we have to pay.
If they agree with it, again, I'd expect to have a conversation with somebody from the PSAA about it.
Okay.
I've spoken to them in the past, so we'll sort of cross that bridge when we come to it.
Okay. Thank you. Anybody else want anything on that item? Okay, if we move on to item 5, which is the outline audit plan for next year. And this again is James.
Thank you, Chair. So pleased to again present to you the outline audit plan for 21-22. So you'll note that this is an outline plan rather than the full audit plan. This is due to the fact that we are yet to fully start our planning procedures. And this has been booked in to start later in the year, and we're essentially doing all our audit in one visit rather than individual chunks. And so as and when the planning procedures are completed, we can update the committee with the formal audit plan. But really, again, I'll take the report as being read and just wanted to highlight to you the significant risks that we're expecting to have on the file. These are usually the standard risks that we would have. So this is on page 47, and this refers to the risk of fraud in revenue recognition, and that is applied to the inappropriate capitalisation of revenue expenditure. That is our expected fraud risk. For our significant risk, we again have valuation of land and buildings, but particularly in relation to fair value and EUV valued properties, and that is on the basis of the findings from previous years. For our inherent risks, we expect to have the valuation of land and buildings, but for the DRC valued properties and for the valuation of council dwellings as well. And finally, the pension liability valuation as an inherent risk. So relatively similar to what we've had in previous years, but just wanted to note as well that this is likely to be a reduction in the number of risks in 21-22 compared with 2021. So on page 49, we just noted those items that are looking to be removed from our significant risk and inherent risk items, that being the compensation scheme for lost sales fees and charges. We expect that to now become immaterial in the accounts. New financial ledger, of course, we identified no issues with the implementation of that, so that can be removed. Accounting for furlough, we had that in last year's plan, but actually it turned out to be, again, immaterial last year. We expect that to carry on into 21-22 being immaterial. And the accounting for COVID-19 grants, as we believe we are satisfied with the first year accounting for those, we expect this to be carried on into 21-22. So the risk has essentially been significantly reduced to allow us to not have to do additional work in this area.
Thank you.
So yes, happy to take any questions.
I just have one, which is the timing of this audit. Where, as I understand it, you're not going to start until November with completion in March 2023, which is later than the Ministry Department for Levelling Up timetable. I mean, why are you going to be so behind that schedule?
I would say there is an element of the fact that we cannot at this time give you sufficient quality resources within the period up to November when the deadline's been set. And so we are not going to do that and then give you a poor quality audit. So we have had to look at our resources and say, when is that available? And we are able to put it in within the timing specified. I know it's not ideal. It's the current situation of the wider market, I think, and that is noted in the appendix of the report as to why some of those issues are occurring. And we're looking to, over time, bring that back to reaching the deadline as set. So yes, unfortunate for both sides, I think, but we're working to try and get back onto track.
I mean, it's not a question of you setting a priority for us, which is lower for other customers. I mean, is that the problem?
So there are some audits that do have to take place earlier. For instance, pension funds. In order for us to sign up your accounts, we need to have the pension fund audited. So those do come first. But then we, based on that, try and fit the audits in as best as we can. I think there is an element as well of the last year where we had the group accounts, there was an elongated issue of trying to clear that. So based on our experience, we believe that is what the council can also achieve. So having a similar sort of deadline to last year.
Okay. Before I come to you, I'll just see if any other member wants to.
I was going to ask about there's the dispute over valuation of commercial properties. On what basis that can you have a different valuation from what we have?
So yeah, as auditors, we are not valuers, so we fully admit that. So what we have to do is we have to get our own specialists in. It's part of the ISO 540 requirements that we have to delve into the estimates, significant risk estimates for the council. So that being the property and investment property valuations. So while you have your specialist, we then have to have our own essentially. It's just part of the requirements. So and as there were differences in the prior year, we have to then have that again as a significant risk going forward.
Okay.
Yeah, I just wanted to comment a little bit on the timeline from our side of things, from the council's point of view, and we are keen to work with James and the team in bringing the audit forward. The November start is problematic for us. It's the point of year when we're actually trying to then get involved in the detailed budget preparation for leading up to the February council meeting. Plus, it's quite a long time lapsed. When you start having queries, say in December, January, from work you were doing in May, June,
you've
all of a sudden you think,
what
what did I do? Or
yes.
where did I put that piece of paper that I was working? So yeah, it isn't ideal. So we are keen to see that brought back forward. But again, as we did this year, you know, we managed, we got through the audit, we got through to a satisfactory completion in the end. So we'll get there again. But yeah, it's not ideal from our side of things, certainly.
Okay. Is anyone? Yes, Henry.
Do we have a choice of auditor?
So we have signed up again with the PSAA. So and around, I think it's about 98% of local authorities have done that this year. So the PSAA, they're aware of the problems in terms of timeliness of audit, as well as things like the fee variations, etc. So they are going through, they've just started the procurement process now that will see us through for the next 5-year period. So essentially auditors get to bid in lots. So I suspect EY will be keen to bid once again. So if, you know, I'm not saying it's likely, but we're likely to have EY as our auditor. So we'll continue to work, you know, with them going forward.
I mean this appointments committee audit point. There's only one audit company, is that right? That they pick one company and they do all.
No, there are different lots. There are different lots.
Ones.
Yeah. So
do we have any choice in that group as to who?
Essentially, no. No. So, for example, a lot of the Hampshire, James probably knows how this works better than I do, but Hampshire, for example, will be sort of pulled together as a lot because it makes sense for a single auditor to have that sort of local presence and to be able to basically have, you know, the Hampshire authorities as a single pool. So that would be one lot under contract.
Would cover
so EY are likely to bid for that lot, just the same as EY, KPMG, you know, whoever else may do. It's not to say that EY will then bid for a lot that's perhaps based in the north of the country if they haven't got the presence in the north. Yeah, that's sort of how it works.
Cut down on travel expenses. Right. Okay. Has anyone got any other questions? Hilary, yeah. Okay. Fair enough. Okay. Well, thank you for that, James. Right. We come on to item 6, which is the draft annual financial report from Alan Bassoon. Alan, do you want to?
Yeah. Thank you. Yeah. Again, I'll keep this brief. It's a similar reporting structure that the committee's seen in the past. So just to confirm, we're working to the 31st of July deadline. That's why we scheduled this meeting for today. So after this meeting, our full set of accounts will be published on the website. I think in general, it's been a good process this year. I think obviously, like we've just covered, we had a bit of work to do in terms of some of the group accounts last year. But again, we've taken that learning from that ultimate year-end position that's been signed off by the auditors and applied that going forward. So it's a good solid set of accounts this year. In line with previous years, I haven't bought the full statement. I think members will be pleased to see that. We didn't necessarily think it worth bringing the full 130 odd pages. So what we've done in the past typically is just come to the committee at this point with the main accounting statements, and then we bring back the full set of accounts once audited later on in the year. So there's nothing particularly I was going to draw out. I mean, obviously the report does cover through section 4 the sort of the key matters. So a lot of this was covered in the annual performance report anyway, in terms of some of the outturn information. In a nutshell, the value of the council's assets has grown this year. That was again down to growth in council dwellings. So I think again we all sort of appreciate how the property market shifted. I'm sure you can appreciate them with over 5,000 properties. Once you apply even a relatively small percentage, the actual growth can be fairly significant. But not a lot has changed in terms of our usable reserves. So if anything, our usable reserves have actually decreased year on year.
Yes.
Predominantly then because of the business rate situation and the value of the reliefs that were given by the government last year, that we've then had to sort of pay back through the collection fund. Chairman, I wasn't necessarily going to go through the detail, but just to confirm then we are asking for members to note, and again just to confirm then, Chairman, at the end of the meeting I will be asking for a signature, so myself and yourself to sign off the main statements.
Okay. Has anyone got any questions on this?
Just One to thank Alan and be Fane for doing
Right.
a fantastic job over the last couple of years. Very difficult circumstances. And
Right.
want to pass our
Good
audit
point.
thanks to you
Pass
and
that
your
to the team as well.
really.
Yeah, thank you.
Although just a little thing, the recommendation 6.1.
Yeah, I've just noticed that. Yeah.
Yeah.
Thank you. Yes, it should.
Long date.
It should obviously say the 31st of July, Chairman. So yeah, I've literally just noticed that at the same time.
6.1.
Yes, that's it. So if we
Well
can note
spotted.
that in the actual recommendation.
Make a note.
committee.
Yeah.
Yeah, thank you.
Okay, anyone? Yes, Tim.
Hi, Councillor Jack Davis, Pennington. Looking at Appendix 1A, which kind of goes through the kind of overall operating expenditure, the income and stuff like that. Could you just go through those headings, the gross and the net and stuff like that? Because I'm just trying to figure that out. Because I'm looking at kind of the variations and what's kind of the explanations behind them. I could just be being really dense here, but just looking at the noughts and stuff like that, I just can't. So the gross expenditure, gross income, net expenditure.
Yeah, so gross expenditure. So if I concentrate on 21-22, which is the figures down on the right hand side of the statement, what it's basically telling us, our overall cost of services last year, gross expenditure wise, was £107 million. So we'd spent 86 odd million in general fund activities. That does include payment of housing benefits. Just say that from the outset. So this isn't all necessarily about provision of services. So we'd spent £86 million in general fund, £21 million in the HRA. Our gross income then, £52 million in general fund and nearly £29 million in the HRA. So take the two away from each other. That results in a gross expenditure, or sorry, a net expenditure of about £26 million for the year across the two accounts. As we go down through the schedule, then it basically then brings in other operating matters, other operating expenditures, other non-specific grants and incomes, etc., until we get to an ultimate bottom line, which reconfirms then the change in the balance sheet position. So reaffirms that the value of the council was grown by £64 million for the year. Again, primarily as a result of increase in asset base plus an increase in cash holdings at year end, which I think we'll probably get to in a little bit more detail when we get to the Treasury Management Outturn report. Is that okay?
Yeah, that's useful. One final one then. I can't see anywhere, and this is just something that I was more interested in with the budget and the expenditure and stuff, and the expected expenditure and the financial side of things. The pay review, would that come under this? Because obviously we're looking.
No, this is purely backward look. This is the council's financial statements as at the 31st of March 2022. That's what this piece does. I think in terms of pay and that side of things, that we're more likely to cover that either in financial monitoring. So we've got cabinet this afternoon, which has got financial monitoring on the cabinet agenda. And I'm currently drafting a medium-term financial plan report, which again will go through cabinet in September. So those reports deal with the forward look. This is very much just a snapshot in terms of 31st of March 2022.
Okay. So there is a recommendation. Is everyone happy that we accept this recommendation and that I'm authorised to sign this bit of paper?
Agree.
Okay, thank you. Right, we now come to the item 7, Treasury Management Annual Outturn Report, where we have Andrew on the screen going to run through this report, please.
Thank you, Chairman. Can I check everyone can hear me okay?
Yes, yes.
Okay. Thank you for letting me test your new technology. I'm conscious it's been a little while since I've been to your committee, so just by way of introduction, I'm Andrew Bowflower. I'm Head of Investments and Borrowing at the County Council. I'm very pleased that we've been working in partnership, and I had to check this because my memory certainly doesn't extend that far back, but we've been working in partnership delivering your Treasury Management Service since 2014. Some of you may well be a lot more familiar with seeing my colleague Gemma Farley, who's written your report today. She actually went on maternity leave at the end of last week. She was hoping maybe she'd hang on for another week to be able to come to your committee. This was her original plan for a last day, but it didn't work out that way. She's doing well, I hope. She'll obviously be back to us, and I've got somebody starting in the team next week to bring us back to full strength. So all is well with us. Thank you. So I'm talking today about your Treasury Management Outturn report, which is kind of our part of our package of reports. So you'll see a strategy for your Treasury Management Service that comes sort of alongside the budget in February time. We do a mid-year report in August, and then this is kind of the last of the three, looking back at the year. And I suppose looking back again with my very poor short-term memory, it's easy certainly for me to forget that a lot of 21-22 we operated with a sort of a backdrop of very low inflation and extremely low interest rates, and obviously things have changed quite quickly in the more recent months. So just kind of going through a few highlights in the report, just to confirm that there was no new external borrowing that was undertaken for New Forest last year, which was as planned, and indeed some debt was repaid as it matured, which again was part of the plans and intentions that we'd set with Alan. Investment balances range from 50 million to 105 million, which is obviously a big difference, but fairly normal in terms of just the different patterns we see in the way cash is received and the way it's then paid out. If I just focus on paragraph 8.9, that shows your return as at the 31st of March. In comparison to average authorities, it was very slightly under the average, albeit we're quite comfortable with that position because we'd achieved that taking a lower risk than the average, both in terms of sort of 25% less bail-in risk and 2 credit notches higher. And then finally, I think just to highlight the very positive impact that the authorities' decisions have been to invest in pooled funds, both in terms of the increases in capital value they've seen, which is shown in table 6, and as well the over 4% return that they're adding to that part of the portfolio, which is all income that's then available to fund the council services. That was all I was planning to say, Chairman, but I'm very happy to pick up any questions.
Okay, thank you very much, Andrew. Just one question. Well, I have a couple, but one initially is on page 77 of our pack, table 2, under the local context. We show it's a very significant movement in total investments. Can you just clarify that and explain that? Goes from 49.9 million in March 21 to 86.5 in March 22.
Andrew, did you want me to comment on that?
Of course, Alan, I'm happy. Yeah.
Yeah, thank you. So again, in the context of various COVID support grants and business support grants, etc., our cash balances did increase over the course of last year. As a good example, we received, I think, 8.5 million for the £150 council tax rebate scheme. I think that came to us on the 30th of March. Obviously, that was then paid out throughout April. We also made a £16 million payment back to DLUC for business grant reliefs that were given throughout 21-22 on the 9th of April. So straight away, within the space of about 2 weeks, that's 24 million pounds that we had in as at year end, but was then given out again through April. So actually, we had a reasonably small increase in cash balances, predominantly because of the lesser expenditure on a capital programme than we were expecting. But the actual level of increase is nothing like as significant as that table would suggest.
So this is purely because it's at the end of March you're showing.
That's right. Yeah. Yeah.
Okay, thank you. Right, anybody else got any questions? I had one more, which is well, perhaps sorry, no, I don't. Okay, next one. Okay, if no one has any questions, I'd like to thank you, Andrew, for that.
No problem. Very nice to see you all.
Thank you very much.
Thank you. Bye.
You're allowed to leave. Oh, you've switched off. Okay. Right. Okay, then we move on to item 8, which is Ryan Stevens' final account bad debts write-off. Morning, Ryan. Welcome.
Morning, everyone. Yeah, thank you, Chair. So this is the annual report that we produce, just giving members details on the total bad debts written off during the previous financial year. You can see the total amount written off was 640,000. Appendix 1 gives the full details and breakdown of that. There is a recommendation. The recommendation is to increase the accounts receivable limit to £3,500. Than that, I'm happy to take any questions.
I'm looking around the room. Anyone got any questions for Ryan? I think just note that this increase of the write-off to 3,500. I think you already have 3.5 for a lot of things. Is that
Yeah,
right?
that's just to bring it in line with
It's
the
bring
other.
it up to bring it into line. Yes, with some of the other limits. I think. Right. Well, are we all agreed to that, to change that level for £3,500? Okay, then. Thank you very much. That was easy, right? Right. Number 9, fraud.
So this one's just as easy. So yeah, this is just another update for members and all the fraud activities during 21-22. Without going into lots of detail, but we outline here the fraud referrals, the type that we investigate, and the outcomes, and some of the results from those. So you can see housing benefits, council tax support, nearly £13,000 recovered, and 2 civil penalties issued and paid as well. Throughout the year, we did review 3 policies which were approved. So they've been updated. Joint work in the Department for Work and Pensions, we're looking to resurrect that again. That hasn't been happening in the previous year because of COVID and the impact of the pandemic. So we're due to meet with the DWP soon to resume that partnership. National Fraud Initiative, we continue to look at the data matches. As we've looked at 275 now out of those 876, and what we do is we prioritise the high risk only because there's so many. So we look at the ones which are high risk and we make sure we look at all those within that 2-year period. We've also done a lot of other fraud this year with all the various business grants and support to households that have been undertaken. So we've done some data matching on business grants. We've been involved with the fraud officer on our e-forms and our processes. So looking at things like the test and trace payment, did a sample check after that. Which came back as all the processes and procedures were followed, and also the £150 energy rebate scheme. So again, the fraud officer has been involved in the process design of that. Pleased to say we've introduced the new online training. So last year we talked about that was in progress. That went live, I think, in the autumn last year, October time, and already over 330 staff have completed that new online training, which is good. We continue to attend the Hampshire Fraud Group, so looking at best practice, sharing ideas, networking with councillors, other councils across the county. And all service managers have a fraud risk register, which we ask them to monitor each year and keep up to date. So, any questions, Jeff?
Just one under fraud referrals. Are these referrals by other organisations, or are these referrals by members of the public?
So they can be internally, or members of the public, so a variety of means that we get these referrals in, email, phone calls, our own data matching exercises, but yeah, a variety of means of getting those referrals.
Okay, because I see you're going to review the website to include a what you call a central fraud landing page.
Yes, at the moment we've got sort of fraud page, which sort of within the benefits pages. What we want to do is link that in with housing and other services. So there's a central place you can go for fraud, and that we're linking all the different teams as well. It all brings it all together.
So this is for members of the public to note. You know, is that what we're looking at, or
On the web page?
Yes.
Yes, that'd be for anyone to look at that, identify fraud, report fraud. So it gives information out there for people in receipt of.
Right. Thank you. Anybody? Yes, Hilary.
The amount brought back in through fraud collection, that's gone down quite a lot. Is that because of COVID or being able to carry out interviews, etc.? I'm pretty sure when we saw this before, we'd taken quite a bit more.
Interviews were suspended because of the pandemic last year. So that obviously has an impact. We've resurrected those and we started interviewing again. Hopefully we can catch up on some of the cases that were sort of on hold from last year.
Do you anticipate fraud getting worse due to the current economic climate, and is anything being put in place to try and manage that at all?
Yeah, we have lots of aspects in our process and procedures already. We do a lot of data matching, a lot of reviews. So we're trying to review more housing benefit claims, council tax support claims. We're working closer with sort of tenancy officers within housing as well. So fraud is always sort of embedded in our process and procedures to mitigate and minimise all fraud.
If someone does carry out fraud and you can see the reason why, for example, they haven't got any money, do we, as well as punishing people, do we help people too?
See, if they've committed fraud, there are sanctions available, civil penalties, etc. If there is additional support and signposting, we would do that as part of the process.
Okay, thank you.
Yeah, I would think the point would be that there's no need to, you know, if they have a financial problem, they should come to us rather than commit fraud.
I
to
agree,
try.
but I think some people, if they get in a situation where they're desperate, might do desperate things.
Yeah. Okay. All right. Yes.
Does housing benefit overpayments in terms of our hours constitute part of this? Does that come under the general description, or is it just a case of this is purely kind of individual led or completing?
This is fraudulent activities on behalf of the claimant. Any local authority overpayment error is treated separately from this.
Okay. Anybody else? Any questions? Okay. Well, the recommendation is to note the report. So thank you, Ryan. Right. We'll come on to item 10. Financial Management Code Assessment of Compliance, which is Alan Bassoon.
Yeah, thank you, Chairman. Yeah, so SIPFA, the Chartered Institute of Public Finance and Accounting, that obviously is our body, if you like, as a local authority, released a new financial management code. We're not duly obliged to comply with it, but it's kind of recommended best practice that we consider our sort of standards and our current processes, procedures, governance arrangements, etc., as against the model SIPFA code. It's fair to say when this was released, SIPFA got a little bit of grief from the sector in terms of setting out what is some kind of utopia of financial management control and governance. Wasn't exactly well received by the sector. Because realistically, no organisation is ever going to get to the level that it's laid out here in terms of this style of best practice. That said, it was a really interesting and enlightening exercise, actually, just to think about how the council operates as against these principles included within this FM code. In terms of why it's against the consultation version, again, I was too stingy to pay the £500 for the actual final version, so I thought I'd measure us against the consultation version on the basis that it wasn't likely to have changed much. So it does highlight a few actions through Appendix 1. So there are things that we will take as a learning point from here, and there are some things that we can that I think we can do better. So there are half a dozen or so actions, most of them being sort of category and medium compliance. There's one there that's high, which I'll touch on in just a moment. But just to go through the medium ones. So again, in terms of the regularly reviewing the skill sets of elected members, again, we're conscious that there's elections in May. What we've typically done is a training pack for new members. But again, what we're going to do this year is a mandatory financial training pack for all members. So even if we may have members that have been here a long time, we will still make it a mandatory requirement to basically fulfil some training, including financial, with some enhanced financial support and training for portfolio holders. Next one on the schedule. Yeah, it's about engagement with the finance teams. Again, I think there's recognition that finance teams in general, they tend to get brought into the conversation quite late. So, services identified as perhaps a problem, and then they think, well, now we've kind of got to the crux of it. We'll just get finance involved at the end just to make sure we've got everything kind of sussed and right. But actually the skill set of the finance team and of the finance team here at the council is really good. They've got a lot of knowledge between them, a lot of experience, expertise. So it's about just understanding that actually they can get involved a lot earlier in terms of process. And that's the same for continuous improvement and transformation programs. Again, we're starting to see some of that already through enhanced financial recognition through the Capital Change Board. Next one was decision making. Again, yes, it's a difficult one, this, because again, with understanding the risks associated with its strategic business partners, again, it's quite high level. We don't necessarily have an awful lot of that here at the council. But again, just to say that we would continually evaluate our standards and conduct, just to make sure that we have got the appropriate governance throughout contract periods. So again, I think that's just almost an ongoing action, really, rather than something that needs to be done once to sort of put it to bed. We then talk about benchmarking. So again, benchmarking is something we do fairly ad hoc, but actually it's quite good practice to benchmark performance of the council against appropriate comparators. So there's a really good system available through LG Inform, which again we do use fairly regularly. So when our new chief exec started, I produced a raft of reports with help from our business improvement team. And again, it throws out some useful and interesting data. So again, it's just about perhaps more formalising that kind of process. In terms of savings trackers, again, with our medium-term financial plan, as we know, we've had to identify considerable savings over the years, and it is quite easy to lose sight actually of how much savings and how many efficiencies that we've actually had to realise across the authority. So again, this concept of a savings tracker, a single document that basically pulls all that together on an ongoing basis. It will be a useful document. So I've set that up. It's in the background now, starting to populate that already in terms of some of the plans that we need to address for 23-24. The one of low compliance was our stakeholder engagement. So in general, I think our internal stakeholder engagement is good here at the council. We have regular reports to our overview scrutiny panels. We regularly engage with task and finish groups or working groups, but we don't do an awful lot of external consultation, and that needs to change for next year. So we are going to look at doing an external budget consultation exercise with our business ratepayers. It's something we should be doing in any case. And obviously we are just about to go out with a resident insight survey. So again, that's actually seeing improvement straight away. So yes, it's right that it's marked as low compliance, but actually, again, by the end of this calendar year, that will have been addressed and will be much better. There's just a few more in terms of the compliance with project investment proposals, sustainable value creation. Again, no authority really does these things to these degrees. When we're quite comfortable that we have our own processes, our own practices in place in terms of how we evaluate projects. So again, the action there is just that we will continue to use and reference appropriate principles as and when necessary. In terms of financial data, yeah, it's an interesting one because what we tend to do at the moment is separate our financial monitoring from our performance management information. So as we know, financial monitoring tends to be the standalone reports to Cabinet, just concentrating on the financial condition and state of the council, whereas we have the portfolio level dashboards that go through overview scrutiny. So there is a separation there in terms of financials against performance. I actually think that's a better way round, because I think if you start trying to muddy too much into, say, a financial monitoring report, you lose the key message that actually this is about financial management. But perhaps there needs to be some better link in terms of how financial management does tie in with performance management. I think the point in which we do that at the moment is at year end. So I think our outturn report, our performance outturn report at year end is really strong, and it does bring those two things together. Whether we perhaps need to do something a little bit different, perhaps as a mid-year report. So again, that's something that we'll take away. And I think that deals with, that deals with all of the medium actions and the low compliance actions. Happy to take any other questions or observations.
Okay. Can I just make one question, observation? I mean, some of these depend on senior management support, of course, in implementing them. And are the finance team getting that support from the senior management team?
Yes, I would say yes.
Yes,
Yeah,
it's
quite clear.
so there's no conflict there. That
no, absolutely not. I think it's just a recognition at times that the finance team are busy. They're a fairly small team now, but actually they need to have the capacity and they need to have the time and ability to get involved in these things. Yeah. So there's no reticence to have them involved.
Okay. Thank you. Anybody got yes, Joe?
The stakeholder engagement, obviously you're saying about the resident survey and the consultation with business ratepayers. That be happening every year as of going forward, because obviously it's all well and good doing it for 1 year, but if you're not doing it every time, then it's not going to work.
Yeah, certainly with the approach to the budget consultation with business ratepayers, that'll be an annual stakeholder engagement exercise, an annual consultation. I think in terms of the approach to the resident insight survey, I don't think it's been committed at this point as an annual insight survey, but to see how basically this first one goes, because it's the first meaningful resident survey we've done for a number of years. So see how that goes, and then see how perhaps a follow-up survey fits in terms of the cycle of, say, the corporate plan. So it's not an annual commitment, but there is a commitment to do further resident insight going forward.
Okay. Anybody else got any questions? Is this just to note this? Is it the recommendation? Yeah, I think there was one thing that perhaps I think we will need, or we should get a progress report against these significant medium risk or medium compliance items. When do you think would be useful?
I think that's a good idea, Chairman. I think this sort of lends itself naturally, I think, for the end of the financial year. So if we were to say a progress update for the March committee, with a view to me just focusing on those areas of action.
Yeah, the ones that you've highlighted as.
Yeah. Yep. So perhaps we add that as a recommendation to the work programme, and Andy.
Okay. Thank you.
You got enough staff?
The
amount of work that you're doing in your department.
It can be a stretch at times, to be honest, but then I think that's just in general how local government is these days. I think with the pressures we've got going forward, I'm doing the medium-term financial plan now with the pay award offer we've had this week. Our gap has grown, from the 2.4 million that it was to now over 3 million. So I think in terms of making a case for additional staff and resources, it's really difficult. I mean, if I felt there were a gap, and if I felt that if I felt that we needed some additional either financial resource or audit resource, I know that senior officers would be willing to have that conversation. But I think at the moment, I think the balance is still about right.
Okay, thank you. Nobody else? Right, thank you very much, Alan. We now come on to item 11, the risk management policy and strategic risk register, which is James Clark.
Thank you, Chairman. Good morning, members. To start off with the risk management policy, I'm of the opinion it ensures risks will be managed consistently across the council with this policy. It shows everyone's roles and responsibilities. The policy will assist in the management of risks from your service dashboards to your portfolio dashboard risks, all the way to the strategic risk registers. As well as managing threats to the council, it assists greatly in identifying opportunities for the council too. So I think we have to get that, both sides of the scale there. As regards to the strategic risk register, it's had a huge refresh. It's been dealt with on more of a top-up approach, where previously it was more of a service-driven risks. Although they are of a high level, this document that lists the 7 risks incorporate cross-cutting risks that affect other service areas, and obviously it's a real important way of identifying those risks. These risks will be monitored constantly. They'll be reported to the EMT and audit committee every 6 months. They will also have an annual report to council as well. I think I've more or less summarised everything within the risk management policy and the strategic risk register. I'm happy to take any questions or any feedback.
I'm sure there will be a few. I have one. My initial comment is in the policy, which is page 127 of our pack, where we talk about the impact rating. So we set out, what is low, moderate, major impacts, and then we have a likelihood rating. And I'm personally not very comfortable with these probabilities that you've put in. In my opinion, highly unlikely, I would have thought, would be something less than 5% probability, not 25%. And unlikely, I would have said, is less than 25% probability, and then likely is somewhere, less than 75%, and highly likely greater than 75%. Now, I don't know what other people think, but that's my comment on these likelihoods. I think to say that if something has a 25% chance of occurring, it's highly unlikely, I think is just misleading. It's wrong. What do other members feel about this? Silence.
I think I would tend to agree with you that anything that's got 25% can hardly be called highly unlikely.
No, I know.
Whether the other percentages you refer to, it's a question of debate, isn't it?
Yes, it is.
But certainly, I can't see anything that's 25% of anything is going to be highly unlikely.
No.
It might be more unlikely,
it might be unlikely,
but it's certainly not highly unlikely.
No.
But by the time it gets to 2 or 3%,
yes,
it's more than highly unlikely.
Yes.
I didn't read it like that, but what I didn't see was the rationale that goes behind it as to how you score it.
Yeah.
Because it doesn't say anywhere there 25%, 50% or whatever percent. I can see getting that from the grid, but when I've done risk management before, there's normally something behind it that says a highly unlikely event would be this, unlikely event would be that, and a likely event would be that. So it would give you something to go by, so that everybody's scoring on the same mechanism.
Yeah, of course, but
Because
this,
it's very subjective, isn't it?
It is.
Yeah.
It is. But this has got to apply to all sorts of
Oh, yeah,
eventualities.
I understand what you're saying. It makes sense what you're saying. The 25%, 50%.
Yeah.
I just didn't see that in there specifically. But I think that's maybe
it's very difficult to give examples
Yeah.
for all of the various risks that we're trying to cover here. Well, I mean, can I just ask that this is thought about again?
Absolutely.
I mean, you ask for feedback.
Yeah, and this is the purpose of it, and it's very healthy to have that. So I welcome it. Just to give you an understanding as to how we come to that, when we took the review, sort of started off from the point of, look, if something's likely to happen, it's more likely going to be around 50%, and that was the starting point, working backwards. But I fully recognise what you say, and this is not. There's different ways of dealing with this aspect of risk. So it is based on our appetite, and it can be amended accordingly. It was just our approach initially, and
I mean, can I ask, is there any expert evidence that would back up these percentages? I mean, there must be. Is there an Institute of Risk Management?
There is. They approach it on a again, it's more of a different way. It is more based on annual events. Say, for example, a rare event would be 1 in 10 years, unlikely would be 1 in 3 years. If it's possible, would be 1 in 2 years, and if it's probable, it's annually, almost certain monthly, and that's their approach to it. But the way we've done percentages is in line with other local authorities within Hampshire. So we thought it would be more consistent to approach it in that way. But again, it's open to debate and can be amended accordingly.
Okay.
I think to be fair, Chairman, that's exactly why we brought this here. I think it's absolutely right that we have debate and discussion on particular elements, and yeah, more than happy to take the comments away and have another look at that particular grid.
Okay.
I think just coming back to Councillor Brown's comment, I think what we've tried to do in terms of the impact rating, because that's a lot easier to determine, so that's where the detail is for us. In terms of understanding the likelihoods, that's where it does become a lot more subjective.
It is.
So it's difficult to put that in kind of the granular level of detail that we've been able to go in to say the impact rating. I'm not sure we'd be able to ever get anything better than
No, I mean, I've done a lot of risk management in the past, running loads of projects, and normally that's a gut feeling.
Yeah. Yeah, exactly.
Okay. I'm just going to ask one more question, then I'll ask other people. On the strategic risk register and supporting communities. I mean, that the first item is communities likely to be negatively impacted, current rate of inflation, etc. And then you've got risk. And I didn't see any actions there that are actually going to address that problem.
Are ongoing. There's no exact deadlines, and it does need to be more focused in terms of delivery against those current circumstances. But it is a starting point, and it is an evolving document. So with further consultation and feedback, I expect those actions to get better as we go forward.
Okay, well, that's a comment. Right. Has anyone got? I've got one or two others, but I'm conscious that other people might have something they want to say. Okay, well, I will carry on then. Under item 5, ensuring robust security measures, you say there that the risk control includes an up-to-date disaster recovery plan. Now, I've already asked the question, but I will ask it in open forum. Who sees this? Who puts this together, and who looks after it, and who makes sure that it's a workable plan?
From an ICT perspective, it would come under Paul Downton, but obviously you'll have your different elements that will feed into that from a service level point of view. So it is a collaborative approach. But if you're talking mainly from a cyber attack perspective,
No, it says data and assets.
yeah. So
I mean, what happens if this building burns down? I mean, that is what I would see as a disaster.
Mm.
And therefore, somewhere in the disaster recovery plan, there must be an action to deal with that.
I think in this particular instance for this risk, we are talking more the digital assets rather than like threat of fire, for example. So perhaps if that's not clear enough in terms of the title, then we can cover that. I mean, I will say that we have got threat response plans that cover loss of accommodation, ICT, and people.
Right.
So that sits within our business continuity plan.
Okay.
So that's covered there. But this was more in and around the particular risk that we feel we face at the moment in terms of the likelihood of being attacked basically through cyber criminality.
Okay.
I think as a local authority, we appreciate at the moment that the likelihood has increased of late. That's based on current guidance from National Crime Agency. So we are just heightening that risk at the moment through the risk.
I don't think we should lose sight of the other risks.
No, that's absolutely right. And if anything, we've got number 7 risk there, which again, it does quote the threat response plans, but perhaps we could eat that out a little bit more, James, just in terms of covering that includes accommodation, ICT, and people. Yeah, and perhaps cover what that means, because I think that's what we talk about with adverse conditions. So yeah, so if this building were to be burned down, for example, understatement, but that would be an adverse condition.
Well, there's a couple
in
of
which
that,
case,
yes. I mean, okay, then if we go on to item 6, I just wanted to, we talk about making sure the workforce is aware that training is available and ensuring professional training availability. I mean, are we encouraging staff to undertake this training? It's got to be proactive, hasn't it? We can't just say, well, there's a course, you do it if you want to do it. We should be encouraging staff to uplift their skills.
Yeah, absolutely.
I think that perhaps could be put in there as an action.
Yeah. So yes, I think you're right. I think we could eke that out a little bit more. I think I can't remember which risk it's in now, but we start to introduce our transformation framework, which again, one of the key strands in that is people, and actually appreciating that what the council is uniquely placed to offer its employees is good training and support packages. We are willing to invest in our staff to make sure that they sort of stay up to date and very recent and relevant in terms of their knowledge. So yeah, you are right. It's something that we could push and make just a little bit clearer.
We as councillors get
the action.
Yeah,
emails telling us to get to
Exactly,
training, and
yeah.
if we don't do it, we get reminders.
which we ignore.
Yeah. So I presume the staff get a similar.
Yeah, absolutely. And again, what we're learning, what we're about to roll out as well as a new learning management system. So again, because the way in which we monitor at the moment staff training is not great. There's quite a lot of manual spreadsheets going on that are quite department specific. So Elena, our service manager for HR, is currently working with ICT in terms of a specific package that will basically monitor and track and store in a nice single database. It'll be a really useful system in terms of reminders, in terms of heads up, in terms of actually specifically targeting tailored training to tailored departments. So we are going to see quite a lot of improvement in that area over the next 12 months.
Courses you can cheat anyway. Keep doing the course until you get 100%. Check all the wrong answers if you want to. And still come back with the right answer at the end.
No comment.
Can I ask, 3, you talk about to assess the effectiveness of capital change and delivery report. Who assesses the effectiveness?
Yeah, it's a fair question. I mean, obviously the capital change delivery board's been set up this April, so we included it on the Code of Good Governance review that we took through the audit committee in March, with a view to coming back through the loop. So it came in May, with a view to coming back with an assessment on, and it will be an officer-based assessment, but it will go through this committee in terms of whether you agree or not that the objectives of that board have been met. Essentially, what it's about is trying to keep a little bit better on top of our delivery of capital projects and of the change programme. So things like key ICT projects. So a lot of it you'll see in terms of whether we actually managed to deliver more as a result of the oversight of that board. So that'll come back through this audit committee.
Just got a little thing about that, because I've never seen anything going from council about setting this board up until through, but whether I missed it or not, I don't know.
Yeah, it was
introduced. The members of this board
It's probably in the small print somewhere.
I don't know who the members of this board are. There's nothing anywhere for us to refer to.
I mean, I can give a little bit more background to it. So when our new chief executive joined the authority, our typical cycle of EMT meetings was EMT met every Tuesday afternoon, and it was always basically the same group of people. We'd have obviously service managers coming into that meeting. We'd have varying third parties coming into that meeting, but it was always just labelled as EMT. Kate's new way of working, so we've got a new cycle now of EMT meetings. So actually, EMT now meet twice a month. The other two meetings that are available, we have a wider leadership team meeting. So that involves and engages now all of our service managers. So as a wider leadership group, which again I think is working really well. And then the fourth cycle meeting is this capital change board. So we have a specific focus. So it is predominantly EMT still, but we have again a core of service managers that come along. So we've got, for example, our ICT, estates, and HR as our core service managers, and Becky from the business improvement side. And again, it's just about having that focus on a very specific element of council business, which is the delivery of our capital programme and the delivery of our change programme. So it is still just part of the management cycle of meetings. I think we did sort of query, is board the right term, for example, because I think as soon as you implement board, it would suggest that it ought to be slightly broader, but we didn't get overly worried about it in the end. We just actually, that was quite a good fit in terms of what it was we were trying to achieve in terms of setting some sort of stricter governance, some of this project delivery. And it was introduced in the February budget report, but it wasn't bells and whistles, because actually as part of the wider purpose of the report, it's a fairly minor technicality, if you like, that a monthly EMT is turning into a monthly capital change board meeting. That was sort of a bit of background to it.
It just seems like there's going to take quite a bit of responsibilities, choices and decisions that can make.
That's not necessarily how I see it, because what we're essentially doing is we're working within the parameters of the programme that's been agreed already. So, for example, the capital programme was agreed by council and then cabinet and then council in February. So we're not changing the parameters of the capital programme. What we're now trying to do is make sure that gets delivered. I mean, in terms of the change projects, that's where it's slightly different. But again, in terms of the change projects, predominantly they're ICT-based projects. So again, we've just had the ICT strategy approved. So again, we're working to then roll that out and roll those projects out. So it's not that the board has any right to introduce new things without it going through the proper formal process. It's just that we want to oversee and deliver what's already been approved.
Okay. You sound a little not quite. Okay. I've got one more, which is on item 7, delivering council services. I mean, a couple of points I have. I do not know why we've added in nuclear powered vessels there. I mean, are we expecting something to happen here in the forest?
This was fed back from a paper that was from, I can't remember the exact paper.
So it'll be the local resilience.
Thank you.
Forum, yeah.
Yeah, and it was listed as a high risk in terms of pollution, that kind of thing. So it's
Yeah, well,
nature, so-
I guess it is, but
I think, Chairman, it's the recognition of the deep water in Southampton Bay.
so it's more
it's
Southampton Port and some nuclear powered vessel coming into the port.
That's it. And obviously with our water
Yes,
being on the
okay.
edge, you know, again,
Okay.
it's outlining there
Okay.
a potential threat.
Well, that's one that I would say is very unlikely. Less than
Less than 25%.
not less than 25%. But under actions required, I mean, we had an episode during the recent storms a few months ago that brought it to my attention. And that is, I think we should have an action in there, which is to set up links to town and parish councils. Because they will be involved in implementing any, you know, these actions through adverse conditions, and to have that link in there.
Yep, I think that on board, James, and we can add that. Yeah.
Has anyone else got any comments? No. Okay, well, thank you for that, James. Right. Well, I think what we were asked to do is provide feedback, so we've done that. Okay. We now come on to item 12, which is the internal audit progress report. And I see we've got Anthony here who's going to
Wake up now.
This is just
bring us up to date.
Thank you. Good morning, members. So this gives our first progress update report in relation to delivering the 2022-23 audit plan that was agreed back in March. So big agenda today. So if I can ask you to turn to page 145. This gives the summary of just sort of where we are in terms of delivering the plan. Bear in mind, this is, you know, just after the first quarter. So 18% of the reviews are up to at least draft report stage, with further sort of 27% in progress. So that really reflects the work delivered in quarter one, plus of setting up the work for quarter two. So for the start of July, we've been about 45% through, is exactly where we'd expect to be. In terms of the update on the management actions that have arisen from previous audit reviews, if you cast your mind back to previous progress reports, there's been some sort of quite long-standing legacy actions that we've been providing an update on for quite some period of time, and also any high priority, more recent high priority overdue actions as well. So it's really good to note that at the moment there are no high priority overdue actions to report on. So everything that was there previously has now been implemented, and that includes a lot of the sort of long-standing actions that were there in and around business continuity. The payment card industry security standards actions are still there, but obviously the committee received an update report and the timescales at the last meeting, with the agreement that an annual report, if not more frequently, would be brought to update members on the position. So whilst we'll continue to track that, we won't report it separately, because obviously that mechanism has been set up now, but we will continue to give you an update on any future high priority overdue actions should any remain. And it's really good to note as well that there were 7 areas where all actions have now been completed as well. So I think that's sort of showing good progress in implementing the areas that have arisen out of previous reviews. There was one limited assurance opinion that's concluded, that's provided for you on page 149 through 150 in and around the use of agency staff. Now, I don't propose to sort of talk you through line by line, so I'm sure that's probably where a lot of your questions are going to be at the end, so I'll just hold off there. And then the remainder of the report just shows where we are in terms of delivering the individual reviews. That refers back to the performance dashboards noted previously. Now, there have been some variations to the plan. So essentially, it was a couple of reviews that hadn't fully been completed last year. I'm showing them as a variation because obviously it's going to contribute towards this year's annual report opinion. So that's effectively the work that's been brought forward from last year. And then there was a generic heading in the agreed plan in and around any grant certification that's been required. So at the moment, I've just sort of listed out what those grants have now been there. We've had that clarity of the detail. So there's the test track and payment scheme that required official certification back to the relevant sort of government agencies or ministries. And I think there was 6 elements of that grant that needed certifying. So that's all been done, absolutely no issues. All the returns been made. And again, there's the Contained Outbreak Management Fund grant funding, again, COVID related. So again, we're required to certify that one as well. So I'll pause there, Chairman, and obviously more than happy to take any questions. And I'm sure there'll probably be a few in around the use of agency staff.
Well, yeah, I think that's going to be the obvious one. I mean, perhaps you would, I mean, you've highlighted it as a high risk item. I mean, do you want to say any more on that?
Well, the actions that were agreed off the back of the review, it's the management team that classify the priorities and the severity of those actions.
So I have to ask Alan, do I?
If I can just give a bit of context and a bit of clarity in around the review. So the council has a multi-agency framework agreement that's set up that includes 15 agencies that should cover every council service should there be a requirement to use sort of agency staff on the basis of either short-term recruitment issues or, seasonal issues that may require the use of agency staff. So the framework's there, which gives the council a lot of protections in terms of pre-vetted staff, agreed contract rates, various bits and bobs that saves you having to go through a detailed recruitment each time you wish to use the agency staff. However, within the guidance, it does highlight that should you not be able to use one of those agencies as your first point of call, because either they haven't got the requisite resources or can't meet the council's timescales, then you can go wider. So the issues, really what we found was the extent that the council was being forced to go outside of that framework agreement. But what we've really tried to acknowledge within that review is that, the last couple of years in particular has been really, really challenging. And I'm sure if Chris Noble was here from the waste side of things, if there's if there's a shortage for a refuse vehicle worker and he needs an HGV driver, he's going to go wherever he can to find the HGV driver if the agency on the framework agreement can't supply. And I think a lot of the off-framework spend was in and around those areas just because, you just couldn't get the resource from the framework agencies. So really what our issues were found was in and around the sort of whether or not full contract standing order processes were followed for going off the agencies. We think that the level of agency spend is not disproportionate, but again, where there hasn't been such strategic reports, and it's sort of difficult to see where the trends have gone over the years. So I think it was the concerns weren't around the actual use of agency staff in particular, it's just the mechanisms that follow, did you follow your own processes, and certainly in around the level of reporting through to senior management team and members.
Looking at the figures in your report, I mean, we're saying, I think, that the agency staff expenditure was 480,000, about 2%.
Yeah. And
the off-framework expenditure, as you describe it, was 183,000. So that is less than 1%.
Absolutely.
So it's not a major.
It's not major in the big scheme of things.
Bigger.
Exactly.
Yeah, but at the moment it's not a.
Yeah.
And do you want to
I think, to be fair, we were working in quite extreme circumstances last year, 21-22, and as Ant's alluded, a lot of this spend was just a case of trying to get refuse drivers. You know, the choice of, do I go to this particular agency who I know we haven't got a framework agreement with, and there's a good chance they can provide us with a driver, in which case we can get the refuse round out, as opposed to, right, I need to spend a day drawing up a contract, drawing up a framework, and then we might. So it's about taking sensible decisions actually in terms of actually what's the real need. The real need at that point was to get the guys in and driving those vehicles. Not to say though that as a follow-up action, and that's where one of the high priority action comes in, is that as soon as we do then engage with a third party agency that's off framework, the manager should be then thinking about getting a framework contract set up. So to enable us to use that particular agency and know that we've got a proper contractual agreement drawn up. So that's, you know, it's a good action. I think it was a fair audit. I think with pragmatic commentary, just understanding that the difficulties that we were facing last year.
Okay, thank you. Anyone got any questions on this? Okay, thank you very much, Anthony. I think you've passed.
Thank you very much. That's why Liz is kept very quiet.
Okay, so item 13, work programme. So it's there attached. Has anyone got any? We said we would add in one item to the March.
That's right. So March 23, an update on the CITFA compliance with the financial management code.
Nothing we can take off, I suppose. Anyone got any comments on that?
Can I just mention, Joan, I think again, in light of the timeline of audit, etc., we may just need to review the January and March split. But perhaps we can do that at the next meeting.
Okay.
So I think we'll get a little bit more clarity just in terms of which papers need to come to either January. But I'm not quite ready to do that just yet.
No, obviously, if he's not going to start till November. So we won't get any external audit. Okay then, well in that case, if no one's got anything else, I have nothing further to say, so I declare the meeting closed. Thank you very much for coming along.